Hi, good afternoon. Today, I will discuss about financial statement analysis. No? Basically, here, very important in terms of this analysis is to be able to know, no? First is your financial statement. So basically, when you say FS analysis, so before that, no, today I will discuss about comparative analysis, no, and identify the tools of it. Okay, explain the threat analysis or also known as horizontal analysis. No? Number three, also I will discuss later about vertical analysis or it is called comparative. No? And number four is ratio analysis. So basically, we will discuss the liquidity, solvency, and profitability of the company. Number five, of course, there are cons, no, in terms of this analysis. So we will consider any limitations. No? So to summarize everything, I will not discuss no, the discontinued operations. So basically, we will just focus on the comparative analysis, which is horizontal and your vertical analysis. Okay. So in terms of ratio analysis, we will just focus on these three, which is liquidity, solvency, and profitability ratios. So please listen because this is part of your term paper so that you can be able to discuss thoroughly about this ratio analysis no, in your term paper. And the limitations, what are the limitations of the FS? You have your estimates, you have your costs, now you have your methods, atypical data, and what you call diversifications. Okay, one by one, I will discuss that one by one. Okay? First thing no, uh, to do in terms of objectives no, is to discuss the comparative analysis and identify the tools no, of the FS analysis. So number one, when you say comparative analysis, no, very important to consider, no, the reporting FS, okay? Your income statement, your balance sheet, your cash flow, your equity, no, and your notes to FS. For example, no, if Omega Corporation reports 243.8 million on its balance sheet as cash, so it is shown on the cash and quantity, no, so it will represents no any increase with the prior year, also any significant in terms of financial data. So here, when you say comparative analysis, no, so we will consider three bases, no, which is intra-company basis, or it is industry averages, or inter-company basis. What do you mean of this? What do you mean of intra-company? So the word here intra meaning this is within the company. So meaning you just compare your reports based on or based within your company. So basically, it is within, no? So internal. Industry average naman is basically compare it with the industry averages. So you need to know the industry of the company. And you have also intercompany comparison with your competitors or external factor. Okay? So intra is more on internal, industry is more on industry, while intercompany is within your competitor. For example, if you are San Miguel Corporation, so your competitor is Asia Brewery. Okay? If you are Unilever, so your competitor is Procter and Gamble. So yan. So in your strama later, in your thesis later, and especially your term paper, no, you can be able to identify comparison. Mas maganda, mas may ganun. Okay? Okay. Comparative analysis, now there are three kinds or three basic tools in this FS analysis. You have horizontal analysis, you have vertical analysis, and you have your ratio analysis. What do you mean of horizontal? It is more on trend analysis, meaning you just compare year by year. Okay? Vertical analysis naman is basically based on a common size FS. So you have your denominator here to compute for this analysis. So when you have your balance sheet, your denominator is always your net assets. Okay? While your income statement always your denominator is your net sales. Okay? Then ratio analysis is basically your liquidity, solvency, no, and profitability. Don't worry, I will discuss it one by one. Okay? Explain and apply of about horizontal analysis. Now, what do you mean of horizontal analysis, or also known as trend analysis? Yes, it is a technique, no, for evaluating series of FS data over time. The word here is trend analysis, meaning you just evaluate year by year, or it is period of time. Okay? So the purpose of this is to determine any increase or decrease in one particular or a period of time. So it is increase or decrease is based on the percentage or based on amount. Okay? I have also here so example. For example, no, Kellogg Company. So you have 2017, you have 2016, 2015, 2014, and 2013. So basically, you want to compare any increase from 2013 to 2017. Okay. So what is the formula to compute for the decrease or for the increase? So meaning change since base period is current year. So here the current year is 2017 and the base year is 2013. Okay, so just minus 6.830.1 by 6295 divided by base year is 2013. Okay, so again, what is the formula for this? No, change this base year is equals to current year amount minus base year amount divided by your base year amount. Okay. Sige. For example, no, we want to compare 2013 by 2017. So Kellogg increased by almost 8.5% by just deducting 2017 by 2013 divided by 6.295. So meaning, 2013 to 2017, you have increased by 8.5%. What is the shortcut, no, in computing for this? Just divide 683.1 divided by 6295.4. You will get 1.085. So meaning, just minus 1 to get the increase, no? So the increase is 0.85. To summarize everything, no? Uh, this is the base tier. So if you increase it by 2014, you have increased by 4.2%. And the another year, you have 2015, you increased by 11.3%. 2016, you have increased by 6.1. And 2017, you have 8.5%. So ganun lang yan, no? Dali lang to. Okay. Kellogg Company, for example, no? You have current assets, you have plant assets, other assets, no? So here, what is the formula again? Base tier, sorry, current tier minus base tier divided by base tier. So current assets here, you have 60.9 by subtracting 1.4 to 1.5, so meaning it is negative. If it is negative in terms of amount, of course, your percentage should also be negative. Hindi pwedeng this is positive, then it is negative. No? Meaning, you have 4.0% decrease, no? From 2016 to 2017. Okay? Plant assets, same procedure. 2773 minus 2932 divided by 2932. Or you can have this increase or decrease and just dividing it by the base tier. Okay? Other assets, ganun din. 636.6 minus 588.5, you have 48.1. 48.1 divided by 636.6, you have 8.2. So meaning, and so on and so forth hanggang sa baba. So, meaning, common stock you decrease by 5.5 million with 2.7% decrease. Okay? What else? Current liabilities, you have also decreased by 541.7. Negative, you have also decreased it by 24.6. So, overall, your assets decreased by 3.4%. Also, in terms of total liabilities and stockholders' equity. Go back to the basic, no? Asset is equals to liabilities plus owner's equity. Okay, how about your income statement? Same, no? Same procedure. What is the formula again? Current year minus base year divided by base year. So 6830.1 minus 6676.6, you have 153.5. So you have 2.3 increase. So 153.5 divided by 6676.6, you have 2.3%. Interest expense, ganun din. 108.3 minus 65.6, you have 42.7. 42.7 divided by 65.6, you have 65.1%. So same formula in terms of your balance sheet, also in your income statement. Okay? So overall, if you analyze this, meaning you will become accountant soon. Okay? Hindi pwedeng you just compute this percentage. No? Very important is to analyze and to communicate it with the intended users. So meaning, if you have 2.8%, no, very important here is to analyze it. Why is it that you have 2.8% increase? So maybe because of higher sales, maybe because of less costs. So ganon, okay? So hindi lang kayo more on recording, but should also be analyzed, no? To analyze the FS, okay? So here is the example. Just read na lang this now. This is the explanation. Why is it that you have increase or decrease? So just read na lang to. Okay. What are the complications in the horizontal analysis or trend analysis in performing this? Number one, if an item has no value in the base year or preceding year, no percentage change can be computed. Yes, if zero, since you are the first year of operation, so you have no base year. Yan. So meaning you cannot compute for any percentage. Number two, how about if it is negative in the previous year? It appears in the base year and the positive in the following year, or vice versa. No percentage can be computed because dapat should be the same as positive. Okay? So if it is negative balance, you cannot compute for any percentage increase or decrease. Okay, for example, no percentage change could be calculated for cumulative effect in Kellogg's income statement. So ano sinabi niya? There's no cumulative. How about this? Cumulative effect on the accounting change because it's negative. Last year you have wala. That's why you have no percentage. Also, other income, no? So you have negative in 2016. So you cannot compare it. So ganun lang. So meaning, if you have negative in the following year or last year, or if there's no amount, so you cannot compute for the percentage. So ganun lang yan. Next. Okay, we are done with this. Next, so we are done with horizontal. Number two is all about vertical analysis. So what do you mean of vertical analysis, or also known as common size analysis? So here, when you say vertical analysis is a technique for evaluating FS that expresses each item in terms of FS as a percentage or as a percent of the base amount. So meaning, yes, you can still compute for the percentage, but it should be based on the denominator or denominator. Okay? So when you compute for balance sheet, always your denominator is your total assets. So meaning total assets is always the base amount in a vertical analysis of a balance sheet. Okay? Also, when you compute for the analysis or vertical analysis of the income statement, you have your net sales. No? So meaning always the base amount in your income statement is your net sales. Okay. What do you mean of total assets? So that's your all assets. No? What do you mean of net sales? Sales minus sales discount minus uh, sales returns and allowances. Okay. For example, vertical analysis of Kellogg Company. As you notice, no? 2017, saan nanggaling yung 30.1%? So meaning 1467.7 divided by 4877.6, because in your balance sheet, always your denominator is the is assets. Now you have 30.1. 2773.3 divided by 4877.6, you have 56.9. 1657.3 divided by 4877, you have 34.0. 196.3 divided by 4877 is you have your 4.0. Pero hindi pwedeng 636.6 divided by 5050. It is in the last year. So meaning you just compare it within the year. So in 2016, 1528.6 divided by 5050, you have 30.3. 201.8 divided by 5050, you have 4.0. Meaning, always in the balance sheet, your denominator is your total assets. So yan. What do you mean of this? So meaning, what composes or a majority of your assets composed of plant assets? Why? It is 56.9% of your total assets. In terms of liabilities and stockholders' equity, ano yung pinakamalaki? Long-term liabilities. So meaning, long-term liabilities is the majority or composed of liabilities and stockholders' equity. How about liabilities now? 79.6 and 20.4. So meaning you are risky. Now, why? Because you have more total liabilities now versus your stockholders' equity. Also in 2016, so composed of 58.0% is your plant assets. No? Current liabilities also is, ang malaki pala is 78.9. Retained earnings. Okay? So all in all, that's the essence of the vertical analysis. You analyze no, based on the numbers. Okay? How about in terms of your income statement? Same. No? In the balance sheet, what is your net denominator? Net sales. Sorry. Assets. No? In the income statement, your denominator is always your net sales. So, paano yun? 1997, 6270.1 divided by 6830.1, you have 47.9. So meaning the base is always 100%. No? So the base is always at 100%. Okay? Selling admin expense 2366.8 divided by 6830.1, you have 34.6. 904.5 divided by 6830.1, you have 13.0. 564 divided by 6830.1, you have 8.3. So basically, meaning, 47.9% is your cost of goods sold percentage based on the net sales. What composed of this is your cost of goods? So majority is your cost of goods sold. Net income daw is 8.0%, meaning profit margin here is 8.0. Okay, so same, di ba? In 1996. Also, in 1996, always your base is net sales. That's why it is always at 100%. 136.1 divided by 6636.6, you have 2.0. Hindi pwedeng 136.1 divided by next year net sales. Okay? So, ganun lang. Di ba? Madali lang, no? That's your vertical analysis or what you call common size analysis. Okay? So, just read this, no? Okay. So, again, vertical analysis shows the relative size of each category on the FS. It is also known as common size analysis. Okay? So, yan. How about if you compare it with your competitor, let's say Kellogg Company versus General Mills, no? As you notice, no, in terms of amount, sino mas malaki? 'Di ba si Kellogg? Okay. Pero but in terms, same din, 8.0. Pero parang malapit lang, no? Pero in reality, no, because of this, because of Kellogg, majority of the expense is selling and admin, no? Also General Mills, no? So mas malaki pa sa General Mills, no? So meaning 8.0% is the profit margin. What is the formula again? 546.0 divided by 6830.1, you have 8.0. Also, General Mills 445.4 divided by 5609.3, you have 7.9%. So meaning, in your paper, you can compare it with your competitor also. Okay? Sige, what are the pros and cons? Just read na lang to. No? This is the San Miguel Corporation, no? FS. Okay, I am not part of San Miguel now, no? Okay, so we are done with the vertical We are done with horizontal. Number three is basically also one of the important factors or tools in analysis. You have your ratio analysis. In analyzing this analysis, no, you have or you need to compute or you analyze liquidity, solvency, and profitability. Okay. So same, again, you will consider this comparison, which is intra, inter, and industry. So ratios provide clues for underlying conditions that may not be apparent from inspection of individual components of ratios. Okay? So there are three types of ratio analysis. You have liquidity, you have solvency, and you have your profitability. What do you mean of liquidity? It measures of the short-term ability by the company to pay its currently maturing obligations, meaning if the company can pay current liabilities, no? Or if they can liquid enough to pay for current liabilities. Solvency naman is more on long-term ability by the company to survive, no? Or a going concern, meaning ability for the company to survive in a long period of time. Okay? Profitability, from the word itself, it is known as income. Okay? Operating success for the income. Okay? Sorry. Next. Nangyari. Next. What do you mean of liquidity again? It measures the short-term ability of the enterprise to pay for its current liability. Okay? So, sino yung mga usual na end users? So, you have your bankers, you have suppliers, you have short-term creditors. Okay, why? Because they're the one who will assess for the liquidity of the company. Okay, what are the examples or ratios in terms of liquidity ratios? You have current ratio, asset test ratio, you have current debt ratio, and you have your average collection period, inventory turnover, and average days in inventory. Okay, I will just focus more on some ratios, no? Number one, very important ratio is the current ratio. Okay, what do you mean of current ratio? It expresses the relationship of the current assets to current liabilities and computed by the following formula. Okay, current assets divided by your current liabilities. What compose of current assets? You have your cash, you have your AR, you have your inventory, you have your prepaid assets, you have your supplies, and other current assets. You have also short-term, yeah? You have also short-term assets, okay? How about current liabilities? You have accounts payable, yeah? You have your notes payable, which is short-term. You have your bonds payable, which is currently maturing, okay? Yan. So meaning, common sense, no? In order for you or in order for the company to be liquid, current assets should be more than your current liabilities. So if you compute for the current ratio should be more than 1 so that you have enough current assets to pay for your current liabilities. Okay. But there are cons in terms of computing for the current ratio, especially when you have inventories, especially when you have more supplies, especially when you have more prepaid expenses or prepaid assets. That's why current ratio should does not take into consideration or composition of the current assets. Why? Because it does not disclose portion of the slow moving inventory. For example, ang dami mong inventaryo, 'di ba? So, parang mangyayari is ano na, and slow moving pa. So, in reality, you have more current assets pero hindi naman na ibebenta. Okay? That's why, number two is you have your asset test ratio or quick ratio. As you notice, there's no inventory in the formula. So, you have cash plus short-term investment or marketable securities plus net receivables. Okay? Divided by current liabilities. What do you mean of net receivable here? So, meaning that the carrying value of your receivables. So, gross amount of your AR minus your allowance for doubtful accounts. Okay. So, meaning, ito yung pinaka-conservative, no, in terms of computing for the quick or acid test ratio. Okay. Acid test ratio is important complement to the current ratio. It does not include inventory or prepaid expenses. That's why only cash, marketable securities, and your net receivables. Why? Because cash, short-term investment, okay, receivables are highly liquid compared with the inventory and prepaid expenses. Inventory may not be saleable and the prepaid expenses may not be transferable to others. Okay. So yun yung reason. Inventory, especially if you have slow moving, it cannot be readily saleable. While prepaid expense may not be transferred to others or cannot be refunded, no, when you pay for it. Okay. Next ratio is what you call receivable turnover. Okay. What do you mean of receivable turnover? It measures the number of times on average receivables are collected during the period. So in layman's term, ilang araw or ilang number of times wherein you can collect from your customer. What is the formula for receivable turnover ratio? You have net credit sales. What do you mean of net credit sales? You have only your AR, no? Sorry, only your credit sales, meaning on AR, hindi pwedeng cash sales. Okay? You divide it by average net receivables. What do you mean of average net receivables? Last year receivables plus this year receivables divided by 2. Okay? Or beginning plus ending divided by 2. Okay. So, in standards, mas maganda, the higher the better. Why? Because you can be able to sell efficiently or effectively the sales. Okay? When you have when you have AR turnover, laging ka-partner niya yung average collection period. Okay? What do you mean of this? Number of days wherein you can collect from your customer. Okay. What is the formula? 365 days divided by receivable turnover ratio. So meaning, kung ano na-compute mo dito, ay just divide it by, your numerator is 365, you divide it by receivable turnover ratio. Okay. Analysts frequently use the average collection period, no, to assess effectiveness of the company's credit and collection period. General rule is that collection should be not greatly exceed the credit term period. So kanina, the higher the better. Ito naman, the lower the better. Why? Ito yung araw na makakolekta ka sa customers mo. Okay. How about inventory turnover ratio? It measures the number of times on average inventory sold during the period. So, in layman's term, ilang araw natutulog ang inventaryo mo sa warehouse, di ba? So, the purpose here is to measure the liquidity of inventory. Kasi madaming natutulog sa pansitan, no? Parang hindi ginagawa yung trabaho. Okay? So, the formula is cost of goods sold divided by average inventory. What is the formula to compute for average inventory? Beginning inventory plus ending inventory, you divide it by 2. Or last year inventory plus ending inventory, you divide it by 2. Okay? So if you have inventory turnover ratio, you have also inventory or average days in inventory. Meaning ilang araw yan natutulog sa warehouse mo and then to sell that inventory. So same in the average receivables, in the receivable turnover or average collection period, the formula here is 365 days divided by inventory turnover ratio. Okay. Ito naman, the lower the better, di ba? So inventory turnover vary considerably among the industries. No? So within the company, there may be significant differences in inventory turnover among different types of products. So for example, if you are San Miguel versus insurance companies, 'di ba? Depende yan sa company. Of course, San Miguel has less days in inventory considering na may bibenta mo kaagad, 'di ba? Pero yung mga insurance companies, yung mga car manufacturer, malamang mahaba ang kanilang average days in inventory, 'di ba? Kasi mahirap ibenta 'yon, 'di ba? Okay, any question? So this is the San Miguel Corporation, FS na. Next, so we are done with liquidity. Number 2 is all about solvency. So what do you mean of solvency? It measures the ability by the company to survive over a long period of time. Okay. Long-term periods or creditors is basically the end users here. Why? Because they see to it that you can be able to survive in a long period of time. So there are also ratios here. I will focus more on the two, debt to assets and times interest earned. No? Okay. What is the formula to debt to total asset ratio? Okay. So it measures the percentage of debt, or sorry, of your assets provided by your creditors. So the formula here is total debts divided by your total assets. Okay. So meaning it is also known as leveraging. Okay. So take note of the second bullet. No? The higher the percentage of debt to assets, the greater the risk no, that the company may be unable to meet its obligations. Why? Because if you have high percentage, meaning you have high debt, meaning you cannot, sometimes you cannot be able to pay for your obligations. But also, lower the ratio, the more equity buffer is available to creditors if the company becomes insolvent. So, ganun lang. Ano yung standard here? Wala naman as long as you can be able to balance your debt with your equity. Okay? You have also times interest earned. So, meaning, ito naman, or also known as interest coverage. So, it indicates no ability by the company to meet its interest as they become due. This is the formula. Times interest earned ratio is equals to income before interest and taxes divided by interest expense. So meaning, ano lang naman to, you can be able to cover payment of interest. Okay. Any questions so far? None? Okay, next. Profitability. So we are done with liquidity. Next, solvency. What do you mean of profitability? From the word itself, it measures income or operating success of the company. Okay? As a consequences, so you evaluate your profitability. So last bullet, profitability is used to ultimately test the management operating effectiveness. Okay. So this is the ratios no of profitability. I will not discuss this no. Next meeting we will discuss about DuPont no. Wag na muna to. So what are the common examples of the ratios no? You have return on equity or return on stockholders equity. The formula here is income available to common stockholders divided by average common stockholders equity. Again, why? Because stockholders equity, the owner talaga is the common stockholders, not the preferred stockholders. Why? Preferred stockholders are only uh, uh, preferred no, in terms of dividends and liquidating dividend. Okay. You have also ROA. So later, maybe on Wednesday, we will discuss about DuPont. No? So kasi ito ay relevant no, in DuPont. So return on asset ratio. So it measures the overall profitability of the assets in terms of rate earned on each dollar invested in assets. So meaning, here to measure the effectiveness of how to on how do you use your assets effectively to generate income. So that's your return on assets. So effective ka ba in terms of using your PPE or you're effective ba in terms of selling more inventories? If not, malamang you have less net income. You're not effective in terms of selling your inventories using your assets, okay? In generating the net income. So leveraging, yun nga, at again means that company has borrowed money by issuing bonds or notes at lower interest rates. No? So leveraging is simply trying to use money. Okay. You have also return on assets ratio. Sorry, you have also profit margin ratio. So ito naman is just like your vertical analysis, same formula, net income divided by net sales, meaning you measures the percentage of each peso of sales that results with the income. Okay. So last bullet, no? Take note of that. High volume, high inventory turnover, enterprises such as grocery, yung Pure Gold, yung Shopwise, yung Save More, of course, they have low profit margin because they have more inventories. It is part of your cost of goods sold. Whereas low volume enterprises such as jewelry stores will have high profit margins because of the higher amount, no, in terms of the jewelry. Okay? Involved in the jewelry. So you have also asset turnover ratio, no? How efficiently the company to generate its assets, no? Sorry, how efficiently a company uses its assets to generate sales. In layman's term, effective ka ba in terms of your assets in generating your sales? Kanina, you're effective in terms of your assets to generate net income. Ito naman, in terms of net sales. What is the formula? Net sales divided by average total assets. No? So again, it will depends on the industry. Okay? You have also gross profit rate. As you notice, it is part of your vertical analysis. It indicates the company's ability to maintain adequate selling price over or above its cost. So, ano yung formula ng gross profit? Net sales minus cost of goods sold. You have your gross profit. Okay? So, industry becomes more competitive. This rate declines. No? So, gross profit rates closely monitored over time. Why? Because it will become part of your cost of goods sold. You have also operating expense sales ratio. In San Miguel, we use this, no? Kasi we have a lot of operating expenses, no? Why? Because management can influence a company's profitability by maintaining adequate prices, cutting expenses. Kasi there are times na more companies, no? Ang taas ng gross profit nila. But, ang taas naman ng operating expenses. So, parang wala lang. Okay? That's why the formula here is operating expenses divided by net sales. Mas maganda, mas lower ka para maganda yung ratios mo. Earnings per share also is part of your profitability. Again, why? Earnings per share belongs to common stockholders' equity. That's why the formula is income available to common shareholders divided by average number of outstanding shares. Why? Because it expressed the net income earned per share for the purpose of determining your profitability. How about if you have preferred stock dividends, meaning you will minus it with the income available to common shareholders. I mean, the formula is income available to common shareholders minus preferred stock dividends divided by average number of shares outstanding. Okay. Earnings per share, again, sabi ko sa inyo, it is part of your common stocks, no? Therefore, if you have preferred dividends declared for the period, you must be deducted in terms of your net income from or available to common stockholders. Yan. So, intercompany and industry comparisons are not normally meaningful for EPS because of the wide variations. Yes. You have also price earnings ratio, meaning market price divided by your ratio or your earnings per share. It reflects the true value of your stocks or reflections of investors' assessment of the company's future earnings. Kasi pag mataas yung stock price mo with your earnings per share, meaning you're overpriced. Di ba? Pag bababa naman, it is a underpriced. Okay? So PE is often quoted static, no, or statistics that measures the ratio of market price for each share of common stock to the EPS. Right? You have also payout naman is basically percentage of earnings distributed as part of your dividends. No? So companies that have high growth rate, of course, characterized by low payout ratios because they reinvest it with the net income. So hindi ibig sabihin na mas mataas siya, you will pay for dividends. Common sense, no? If you have more growth rate, some of them are part of appropriated earnings, meaning set aside for further expansion, set aside for paying obligations, or set aside for other investment. Okay? So this is the San Miguel Corporation stocks. No? Ratio analysis, no, in terms of this type of FS, no, ratios by various industries, no. So it depende yan, no, in terms of the ratio analysis. Okay? So next meeting, we will discuss about DuPont equations. So on Wednesday. So just read about DuPont, and also I will also discuss about able technique, no, para mas madali sa inyo in terms of doing your paper as part of your term paper. Okay, if there's no question, thank you for this day. Bye bye.